What's up everybody, I'm Jaspreet Singh, and the most difficult thing about investing your money right now is just trying to figure out what to do. Like, should you cash out of your 401k and buy this picture of an ape, an NFT with lasers shooting out of his eyes? That's exactly what a photographer did, and it net him $1.4 million. This is one of the reasons why people are so confused about how to invest their money right now, because you see some people making a killing buying things like pictures of apes, and then you see other people that are losing money while investing their money into solid companies. And then you have these millionaire millennials that are saying that they are getting ready to sell their stocks this year, but JP Morgan Chase Bank says, hold on, don't sell your stocks. People are way too bearish about the market in 2022. Then exactly 1 month later, JP Morgan came out again and said something a little bit different. JP Morgan said, JK, we're just kidding because we are in a bear market, but you should buy the dip. This is why so many investors are confused, because if you save your money, it's getting eaten away by inflation, but if you invest your money, you might see it get cut in half. It feels like every time the Federal Reserve Bank comes out and says that inflation is not a big deal, you don't need to worry about it, inflation ends up becoming an even bigger deal, which is why Ray Dalio keeps saying that cash is trash and why you need to be investing your money. So what I want to do today is talk about what I'm doing with my money, because I'm going to buy a very expensive picture of an ape. Just kidding. Or am I? When I invest my money, I follow two general kind of high-level strategies. I have a passive strategy, which I'll talk about first, and then I have an active strategy. A passive strategy is exactly what the name says it is. This is completely passive. This is money that's automatically invested that I just set and I don't touch. My active strategy is a little bit different. In my active strategy, these are investments that I'm actively looking for, that when I find a good deal, that's what I'm going to go out and buy. So let's start by talking about my passive strategy. There are three places where I am passively investing my money. I'm passively investing my money in stocks, I'm passively investing my money in crypto, and I'm passively investing my money in physical commodities like physical gold. The nice thing about a passive strategy is you don't need any sort of dollar amount to start investing your money. Like, you can start passively investing your money with as little as $100. You just need to figure out what it is that you want to invest in and at what cadence. In the stock market, I'm investing weekly, every single Wednesday. In the crypto market, I'm investing every single day. And in the gold market, I'm investing once a month. I don't have any of the traditional retirement accounts. I don't have a 401k. I don't have an IRA. I'm not a big fan of those. I mean, they're great places for you to start. They're great for the average investor, but once you learn about how to invest your money, you're going to see that there are other ways that you can get the tax breaks, where you can get better returns, where you can have better control over your money. So I like to invest my money myself. When I passively invest my money in the stock market, I'm not passively investing into individual companies. I'm looking for ETFs. I'm looking for funds that gives me exposure to the general market or indexes that I want exposure to. Right now, this might change in the future, but right now I'm investing my money into three different categories of ETFs in the stock market. The first category is ETFs that give me exposure to the S&P 500. The second category are ETFs that give me exposure to innovation, and the third category are ETFs that give me exposure to emerging markets. The reason why I picked these three different things is because now I'm creating a portfolio that benefits me regardless of what type of economic environment that we're in. Does this mean that my portfolio is going to be up every single month? No. I mean, investing has risks. You're never guaranteed to make money when you invest. You might even lose money, which is why you need to always do your own due diligence and never blindly listen to a random guy on YouTube. But the reason why I like these three different funds is because my S&P 500 ETFs give me exposure to the biggest 500 companies in the stock market. So those ETFs are giving me exposure to the general stock market and the general American economy. If our economy is growing, these ETFs will grow. If the economy is not growing, then these ETFs are not going to grow. Then in the second category of ETFs, I'm investing in innovation. Innovation are companies that are investing in new type of technologies, new things that might be used in the future. This is a higher risk because there's a chance that some of these companies will fail, but I'm a big believer in things like fintech, the financial technology space, because, well, I love finance and I understand the space and I work in finance, so I like investing in that space. And I also like things like genome technology, the future of healthcare. And then I also have ETFs that give me exposure to general innovation and general growth that was not just one particular sector. I'm not going to go over each individual ETF and how to analyze them in this video because I've already gone over that on our channel. So if you want to watch that video, I'll link it for you in the description below. And then I have the third category of ETFs ETFs, which give me exposure to emerging markets, which means that these ETFs are investing in companies outside of the United States. Each of these three categories thrive in a different point in our economic cycle, which is why I like to invest in all three of them. Like in the emerging markets, when we have a lot of high inflation in the United States, people are worried about the dollar, people are worried about the American economy, well, that's when you can see more growth in the emerging markets. And if you start to see more companies outside of the United States and more countries outside of the United States grow, well, that's good for that category. When you're in a period of low interest rates and high growth, that's when the innovation companies can see a lot of upside. And then I have my safer S&P 500 ETFs, which is more protectionary, where if the economy grows, you'll see this ETF grow over time. There's three keys that I follow that really anybody needs to follow if you want to make any sort of passive investing strategy profitable. The first thing is this has to be automatic. That means now you're going to have money automatically deposited, whether it's once a week or every 2 weeks or every month. It's going to be automatically pulled out of your checking account and it's going to go into your investment portfolio. The second thing is it needs to be consistent. That means it has to happen every week or every 2 weeks or every month. You got to be consistent whether the market is up or down. You're not trying to time the market anymore. You're going to let the market do its thing and you're going to automatically consistently invest your money, and then you have to give it time. Time means this is not something you're going to do for 6 months or a year. You're going to do this for years and you're going to let this build, compound, and grow. This is how you build a profitable passive portfolio over time that can grow, compound, and build you serious wealth without you having to do anything. Like if over the last 40 years you invested just $500 a month into the stock market and you were able to get an average 10% return, that doesn't mean you're getting a 10% return every single year. That means the average is 10% a year, which is the historical stock market average. That $500 monthly investment would have grown to almost $3 million with you doing nothing else except you just passively investing your money. I use M1 Finance to passively invest my money in stocks. They are a sponsor of Minority Mindset, but I like them because they're super easy to use, it's pretty simple, and it's free if you're just investing your money. So if you want to learn more about M1 Finance, I'll put our link to how you can do that in the description. My passive strategy for crypto is very different than stocks. Now the first thing you got to understand is crypto is speculative. It's risky, it's very volatile, so you first have to believe and understand the value of crypto before you start investing your money in crypto. Now, I believe in crypto, I like the future of crypto, which is why I invest in it, but you first have to start there. Do you believe in crypto or not? If not, then this doesn't matter. The thing that's the same between passively investing my money in crypto and passively investing my money in stocks is you need the same three keys. It has to be completely automatic, it has to be consistent, and I have to give my investments time. If you want to invest your money in crypto, you have to understand that this is not trading. When I invest my money, this is something that I want to own for years, where my portfolio is going to have time to build and compound. I have two different goals when I'm passively investing my money in crypto. One is generating interest, and the second is acquiring more cryptocurrency. There are certain cryptocurrencies that I can buy which will pay me for interest if I put them into a certain account, because this account is going to work almost like a bank. It's not a bank, but it's similar to a bank, where they're going to work to lend out the cryptocurrency and I get paid interest for keeping my cryptocurrency in this account. It's not tied up like a CD. I can pull my cryptocurrency out anytime that I want, but I'm getting interest for keeping my cryptocurrency in this account. So what I do is every month I buy a few stable coins. A stable coin is a cryptocurrency which is stable. That's why it's called a stable coin, where one stable coin is equal to the value of $1. So one stable coin, $1. If I buy 100 stable coins, it's going to cost me $100. And so I buy stable coins every month, and then I put these stable coins into an interest-bearing account. This is where I moved a big chunk of my savings and where I have cash that's waiting to be invested in an active investment. I'll get there in just a second, but this is where I'm keeping a big chunk of cash because it's earning me much better interest than I would have gotten if I just left this money in the bank. Like right now, at the time of me recording this video, I'm earning more than 8% a year in interest on my stable coins. And again, I can pull these stable coins out at any time, and you don't see the same fluctuations and volatility with stable coins that you see with cryptocurrencies because again, they're stable. If I buy $1,000 worth of stable coins, I can sell the 1,000 stable coins and get $1,000 back. That doesn't mean that it's risk-free. I mean, something could happen to my stable coins or something could happen to the interest-bearing account, but this is where I keep a big chunk of savings because I am earning a much higher interest rate here than I would have gotten than if I kept my cash in the bank. I use a platform called BlockFi to do this. They're also a sponsor for Minority Mindset. It's gonna seem like this video is just one big pitch video, but that's not what I wanted it to be. I just want you to know which platforms that I use, but I use BlockFi. I like them because they're easy to use. They don't charge you anything. They pay you good interest rates, and they take better care of your money than some of the other accounts that pay you much higher interest rates. So if you want to learn more about BlockFi and try them out, I'll put the link to how you can do that in the description. The second thing that I do with cryptocurrency is I acquire more cryptocurrency every single day. So I have a dollar cost average system set up where every single day I'm buying a little bit more of Bitcoin and a little bit more of Ethereum and a couple other of the smaller coins, but most of my money is going to Bitcoin and Ethereum. That's why I don't care if Bitcoin is crashing or booming, because my strategy says that every day I'm just going to be buying a little bit more. My goal here is just to acquire a bigger portfolio of the cryptocurrencies that I believe in and let this portfolio build and grow over time. And then I have a passive strategy for how I invest in physical gold. Gold is a hedge against inflation. That's why I invest in gold, because it's kind of like financial insurance. When you own physical gold, you own real money. Gold doesn't work like stocks, because when I invest in a company or when I invest in these ETFs, these companies are working hard every single day to increase the amount of value that they put out. So if I invest in the Amazon company, Amazon is working hard every single day to produce new products, to generate more revenue and to make bigger profits, to help drive the value of Amazon up. In gold's case, it doesn't work like that. When you buy some gold, you put it in a drawer and it just sits back and looks at you. It doesn't do anything. Now, while my physical gold isn't working to produce more value, what it does do is it gives me financial insurance, because as the value of the dollar goes down because of inflation, and we all know that inflation is not slowing down. We saw 7% inflation in 2021. Who knows how much inflation we're going to see in 2022 and 2023, but as inflation stays high, that also means that the price of gold will probably go up too. The reason why the price of gold goes up is not just because gold starts producing more value, it's because the value of the dollar is going down. Between 1913 and now, the United States dollar has lost something around 96% of its buying power, because the Fed keeps printing more and more money, which devalues the value of the dollar, while at the same time, over the last couple of decades, we've seen the price of gold shoot up because the value of the dollar has gone down. So I don't look at my gold as an investment. I look at it as savings, because now I'm saving real money. It's tangible, it's physical, it's something that I can see, feel, and touch. Because if I wanted to save $10,000, I ask myself, would I rather take $10,000 worth of cash and bury that in my backyard? Or would I rather take $10,000 worth of physical gold today and bury that in my backyard? I think that in 10 years, that $10,000 worth of physical gold today will have more value than the $10,000 worth of cash that I buried, which is why I like to have this gold as real money. I use a platform called Vaulted to buy physical gold passively. Again, they are a sponsor of Minority Mindset. You don't have to use any of our sponsors. Please do your own research, but I like Vaulted because it is completely passive. You can do it automatically, and you can let this happen on its own. So you can buy any amount of gold that you want, and then the money will sit there. It will buy physical gold. So as you invest more money in your account, it will show you how much physical gold that you own. And once you own enough gold to buy a whole gold bar, you can have this gold bar stored in a vault, or you can have it shipped out to you. If you want to learn more about Vaulted, you know where to find them. I'll put their link down below in the description. And this brings me to my second strategy, which is my active investment strategy. While my passive investment strategy happens automatically and it happens consistently, I'm investing in the stock market every single week. I'm investing into cryptocurrencies every single day. I'm investing into physical gold every single month. My active strategy doesn't work like that. There are 5 different places where I actively invest my money. I invest my money into my business, into real estate, into startups, into stocks, and into cryptocurrency. And my goal here is to look for the best opportunity. This isn't something that's just going to happen automatically. This is where I'm actively working to find deals. I'm actively looking for a good opportunity where I could put my money and maybe my time too. And now I am working to find the best possible deals. Let me start here on the business side of things, because I did a lot of soul searching in the end of 2021 and the early part of 2022, trying to figure out exactly what it is that I want to do. Minority Mindset started off as a business. We had a whole bunch of things going on. We had some classes, we had an app, we had a blog, we had a financial newsletter, we had an education newsletter, and I started to ask myself, what is Minority Mindset? How is that separate from Jaspreet Singh, and how is it separate from the business? Because anytime you'd ask somebody about Minority Mindset, they would assume that that's just Jaspreet Singh. And so we made the decision in the early part of 2022 that Minority Mindset is now going to become just my personal brand. It's going to become an extension of me. So Minority Mindset will be Jaspreet Singh. And so the minoritymindset.com will just be my blog, and all of our other products and other companies are going to be separate. One of our products, which is now split off into its own company, is Market Briefs. If you've been subscribed to our financial newsletter, you already know what Market Briefs is. Market Briefs is our daily financial newsletter. Every day, my Market Briefs team is sourcing the finance and business news to see what's happening, to see what's important, and then they break this down into a fun, entertaining, and witty newsletter that you can read in less than 5 minutes, and they send it out to you every morning, Monday through Friday and Sunday at 7:30 a.m. Eastern Standard Time. So this is one company which is spin off into its own brand, Market Briefs. You can see it at marketbriefs.com. And then we also have Market Insiders, which is our financial education app. We'll be launching this app in the App Store by the second quarter of 2022, but essentially in this app you get on-demand video lessons from stock market, real estate, and cryptocurrency coaches, and this is live, and you get to watch these every single week. So every week you're going to get access to a stock, real estate, and cryptocurrency coach. Every week they're going to be giving you live lessons, and you can watch these on your app, on your computer, on your desktop, whenever you want. Again, if you want to learn more about that, you can go to marketinsiders.com and try it out for free with a free trial. So I've separated these two companies into separate entities, and now I am working to grow these two separate entities. And this is where I had to ask a question to myself. What do I want to do with my excess money? Do I want to take this cash and go out and buy some real estate or some stocks where I could get a decent return, maybe 7% a year? Or do I want to take this cash and help grow these companies? Every entrepreneur, every business owner goes through this question. What do you do with excess money? Do you reinvest it back into yourself, or do you take this cash and then put it into a passive investment? These passive investments have the goal of giving you a passive return, hopefully somewhere between 7 to 10% a year. That is the goal that you're looking for with most passive investments, with stocks and real estate especially. And so now I'm trying to ask myself, what do I really want to do? Do I want to help build these businesses, or do I want to just go out and buy some more real estate? And I see a lot of value with the businesses that we have, and I'd like to start growing these some more. So what I'm going to be doing a lot in 2022 is just investing this money back into me, back into my businesses, whether it's through marketing, whether it's through hiring more team members, whether it's through investing in my own education or consulting. I'm going to be investing this money back into my business. This will be my biggest investment in 2022, hands down. I mean, they always say that the best investment that you can make is yourself, and I do already have some investments here. And I think it's time for me to make a little bit more risky investments. And in this case, that is going to be my businesses, but I can mitigate some of that risk because I know the person that's running these companies. It's me. So I believe in myself, I believe in our products, which is why I'm going to be investing very heavily into these businesses. Again, if you want to check out the businesses and help support, you can go to marketbrief.com to check out a free financial newsletter, or you can check out marketinsiders.com to check out our financial education app. This brings me to number 2, which is real estate. I've been investing in real estate for just over a decade now. And if I look at my passive investments, real estate, stocks, cryptocurrencies, startups, and physical commodities like gold, real estate is definitely the biggest chunk of my portfolio. I like real estate because when I invest in real estate, I'm looking for one thing: cash flow. I don't care about appreciation. I don't care about home values. The thing that I'm looking at is how much money do I have to invest today, and how much money am I going to get paid in passive cash flow every single month after that. When I invest in real estate, I'm looking for growing areas and I'm looking for good deals. So I'm looking for a property that's beat up where I can find a good opportunity. I'll buy this property, renovate it, and then rent it out, and then I will use this property to pay me with passive cash flow. I don't want to go over the ins and outs of real estate investing in this video. I've made other videos where I talk about that, but the thing that you have to understand about real estate is, in the beginning, it is anything but passive. It is a ton of work. You have to go through the learning hurdle. You have to go and meet all the team members. You have to find the right people. You have to learn how to deal with tenants. You have to learn how to deal with property managers. You have a big learning hurdle that you have to be able to get over. But once you do that and you have the right team, investing in real estate can be very passive after you buy a property. I'm still involved when I buy a property in the renovation side, but after a property is renovated, I will give the keys over to my property management company and I'll let them do everything after that. I'm always looking for real estate deals. I have real estate agents that I'm working with. I am a real estate salesperson myself, so I have access to the MLS, which is the real estate database. So I'm always looking for real estate deals, but one of the things that I decided in the later part of 2021 is that I am going to not buy as much real estate this year because I want to invest more heavily here. Now, if I do see a great real estate deal and I have some extra cash that's not being invested here, sure, I will go out and buy that real estate, but I know that I'm not going to be buying as much real estate because I have more cash going right here. This kind of works out in my favor because we have so much craziness happening in the housing market right now, but that also does not mean that I will not be buying any real estate. I am planning on buying some real estate in 2022 as an investment, just not as much as I would have if I wasn't investing so aggressively here. The third way that I'll be actively investing my money in 2022 is into startups. Now, back in the day, this used to be very hard to do. If you wanted to go out and invest your money into a startup company, it was going to be very expensive, very hard, and they wouldn't even care if you were offering them money unless you had a decent chunk of change. But nowadays, thanks to something called Reg CF, which stands for Regulation Crowdfunding, which means you can now invest into startups even if you are not an accredited investor. So now anybody can go out and invest into these type of startups, and you have platforms like WeFunder and Republic and Start Engine, which make it super easy, where now you could take as little as $100 and go out and invest into any one of these startups, and now you get a piece of the upside, because now you can invest into a company that you believe in an early stage, and if this company gets acquired or if this company goes public, chances are you are going to get a big payday. But the risk here is there's also a big chance that this company is going to go bust. When I invest in startups, I know that there's a high probability that this company is going to go nowhere. So it's much riskier because you're investing in an early stage company. You're investing in a company that's trying to grow, that's trying to become profitable, that's trying to maybe get acquired, maybe go public. And so you only get paid here with these startups if this company goes public or if it gets bought out by another company. If it never gets bought out, if it never goes public, well, you might never see a return on your money. That's why startup investing is much riskier, but you also have a whole lot more upside. I have a little bit of an advantage here because I'm an entrepreneur myself, so I know what to look for. Plus, I have a platform where a lot of startups are looking for this type of exposure. So one thing that I can do is if I find a company that I believe in, I can work with them where they will give me a piece of the company, some equity, in exchange for exposure on my brand. So I know I'm really lucky where I have a lot of leverage with these startups, but I like investing in startups because it's fun for me. I am an entrepreneur. I love entrepreneurship. I love promoting entrepreneurship because growing up, I was never told that entrepreneurship is okay. It was very much discouraged in my household. I grew up in a traditional Indian house. I was supposed to be a doctor. Anything that's not a doctor is a failure. So I had to go through a lot of hurdles trying to start my own company, trying to do all this myself. But now, because of that, I love entrepreneurship and I try to support entrepreneurs any way that I can. So one of the ways that I do that is by actually investing into these companies. Now again, I won't be investing in as many companies as I would have if I wasn't investing so heavily in my business, but I'm still always looking for deals in the startup space. And then we have stocks and crypto. Now this falls more on the traditional investing side, where here I'm just looking for opportunities, okay? If the stock market crashes, if the cryptocurrency market crashes, I'm gonna be coming in and buying. I know which companies I like. I know which companies I believe in. I'm researching these companies. These are things that I do in my free time. I like studying the markets. I'm a money nerd. I know. I enjoy doing this. I like listening to the earnings calls. So I know which individual companies that I want to own. And if these companies crash, well, that's an opportunity for me to come in and buy. I talk about this all the time on our channel, but most people are scared of market crashes. Most people are scared of recessions. But the thing that you have to understand is that market crashes and recessions make more millionaires than any other time, because it's like Black Friday for investors. It's a time for you to go out and invest aggressively because you can buy assets for pennies on the dollar. Imagine if you would have bought stocks in the 2020 stock market crash. Imagine if you would have bought real estate after the 2008 crash. Imagine if you would have invested into the stock market after the 2000 dot-com bubble. So there's always opportunities. You just need to know where to look. I don't like chasing stocks. I don't like chasing cryptocurrencies. I have a passive strategy. My passive strategy gives me exposure to the stock market. It gives me exposure to the cryptocurrency market. It happens every week. It happens every day, whether the market is up or down. I let that happen no matter what. But when I'm investing in individual stocks, not an ETF, but individual stocks, I'm looking for deals. So I'm waiting to see the price of the stock come down to where it's a good price where I will come in and buy. And if I see a market crash, you bet I'm going to be coming in and buy. When the cryptocurrency market crashes, you bet I come in and buy. But I want to buy something that I like the price of, where I think it's a good deal, because I don't want to be the person that's chasing the assets. The last thing that I want to mention is this. You don't need a ton of money to start investing. This might seem overwhelming where, oh no, I don't have hundreds of thousands or millions of dollars to invest like this. You don't need that. Start with $100. If you have $100, just start passively investing your money. If you have $1,000, maybe you can start actively investing your money. You have to just get started. It does not matter how much money you have. You don't have to invest your money into 10 different things at once. When I first started investing, I first just started buying real estate. Then I started investing in stocks. Then I started adding in more things and more things and more things. But first, you have to start with one. You start with one, then you can grow into the second. Then you can learn about that. Then you can go to the third. You can't try to do everything at once, but you have to get started. It doesn't matter if you have $100, $1,000, $10,000. Start with whatever you have. Start investing and be willing to learn and be willing to lose. Because one of the biggest things that holds people back from investing their money is the worry that they're going to lose money. Well, if you understand that, yes, I will lose money, then you're going to be much more likely to invest and you're going to be much more likely to learn, because when you have skin in the game, that's when you are going to learn the most. So you have to just get started, be willing to learn, be willing to lose, and be willing to try things. And then you're going to see what you like, you're going to see what you don't like, and that's when you're going to learn how to be the best investor possible. What's up, everybody? If you want to continue building your financial education, I linked a relevant video here that I think you'll love. And as an added bonus, I have a free guide on how you can start generating passive income that you can download and read for free. All you gotta do is click that button below. Now, when it comes time for you to actually invest your money into an ETF, there are three big questions you always want to ask. The first question is, who made the ETF? Second is, what do these ETFs actually invest in and what percentage of each company? And third is fees, because you don't want to give all your money to fees.